Hey guys, you know what I hate? I hate stealth taxes. You know, those taxes and fees in small print that silently suck away wealth. You know what one of the bigger ones are for those that don't prepare? Medicare Part B premium surcharges, also known as IRMAA. No matter your age, in my opinion, you should know what this stealth tax is, who it applies to, and think about planning now to reduce the likelihood it impacts your retirement. Stick with me as I explain what the Medicare Surcharge, or IRMAA, is, how she can suck money out of your retirement, and how to minimize the chance she does it. Colin Exelby here, and I'm a certified financial planner professional with over 20 years of experience providing financial planning for business owners and their families that just makes sense. I own the financial advisory practice Celestial Wealth Management and provide advice virtually to clients all over the country. Now, let me paint this picture for you. You work your entire life, paid your Social Security and Medicare taxes, and now at 65, you get your Medicare and it's all free. False! This is a good spot to point out important disclosures. The information in this video is for educational purposes. This is not specific financial planning, health insurance, or investment advice. In addition, everyone's tax situation is different. You should discuss your tax situation with a qualified tax advisor before implementing any planning strategy. When people think of free Medicare, they're thinking of Part A, which covers hospital stays, care in a skilled nursing facility, hospice care, and some home health care. This is what most Americans qualify for free. But Medicare Part B is a completely different animal, and a lot of people don't really understand how it works or where the stealth tax lies. But that is where the opportunity is if you plan for it early enough. What is Medicare Part B? Part B covers two types of services. First, Part B covers medically necessary services. Services or supplies that are needed to diagnose or treat your medical condition and that meet accepted standards of Medicare practice. Second, Part B covers preventative services, the cost to see your doctor, healthcare to prevent illness like the flu or detect it at an early stage when treatment is most likely to work best. It also covers things like ambulance services, inpatient and outpatient mental health, and equipment like crutches and commodes, hospital beds, wheelchairs, and blood sugar meters. These are items that many people will need at some point in their lives. What many people don't know is that Medicare Part B, the cost is income adjusted. The more income you make in retirement, the more Part B costs. If you don't want to be surprised, stick with me and I'll tell you all about that irritable old lady IRMAA. And if you don't want IRMAA to come after you, make sure you smash that subscribe button, hit that little bell so you're notified whenever I release a new planning video. Let's think about all your potential income sources when you qualify for Medicare at age 65. You or your spouse may still be working. You may be taking distributions from your 401k or IRA. You may be lucky and receive a pension. Maybe you have rental properties or stocks and bonds that produce income. And all of that income counts as IRMAA income. First, there's a base premium that everyone pays for Medicare Part B. It's currently $170 per month per person. If you have any income, including Social Security, you're going to have at least that Medicare Part B premium. Now let's talk about that mean old lady IRMAA. IRMAA stands for Income-Related Monthly Adjustment Amount. It's an extra amount added on that you pay in addition to that $170 per month if your income is above certain levels. Now, IRMAA sets 4 income brackets to stealthily take away more and more of your wealth. If you are married in 2022, the first level of income that IRMAA takes effect is when your modified adjusted gross income, or MAGI, is between $182,000 and $228,000. If you are single, it's over $91,000 and under $114,000. You can see that your monthly premium increases from $170 to $238. You can see the additional income brackets right here and how the monthly payments really start escalating. Now, I know many people whose incomes due to employment income, investments, or Roth conversions make it possible for IRMAA to stealthily take your wealth. What's worse, the surcharge is cliff, meaning you only have to go into those brackets by $1 and you pay the entire increase. If you're in your early 60s, make sure your tax planner and tax preparer know about IRMAA and do everything you can to stay in the lowest bracket possible unless there's a really good reason to be in a higher bracket. Now, when we talk about the difference between the single and the married filing jointly, there's an important thing to note here. If one of your spouses were to pass away, you would move from the joint bracket to the single bracket, but you most likely would have a similar income. So often people who start out in retirement, married, and not subject to IRMAA end up with what I call the widow's surcharge. And that's after one spouse has passed away, the increase in the IRMAA surcharge hits because you move from a joint to a single tax bracket. It's something to watch out for as you're doing your planning. But you know what's really weird? The way this works is that your current Medicare payment is based off of your income 2 years ago. For many people, that makes this even more confusing. So I'm filming this in 2022. Anyone paying for Medicare in 2022, it's based off of your reported income from 2020. Now in 2023, it'll be based on your 2021 income and so on. It's always 2 years behind. This can be interesting for financial planning if you had large incomes 2 years ago, but no longer do. When income falls substantially, you can appeal the surcharge by submitting Form SSA-44 to the Social Security office and crossing your fingers. All right, what about Medicare Part D prescription drug plans? They are also affected by IRMAA. Not as much, but here's a chart of IRMAA on Part D. Your monthly cost increases here as well as your income increases. Same income levels, but the premium increases are smaller than Part B, thank goodness. Okay, now that you know all about that nasty old lady IRMAA, she's one of those stealth taxes not many people talk about. CPAs don't really talk about it. I've seen people whose wealth was taken by that old lady for going only a few $100s over. And not many financial planners talk about it either. But you know what? When you're trying to maximize your retirement cash flow, knowing how the government can take it is really important. So what can you do about it? As your tax return is being prepared, make sure you and your CPA are aware of the thresholds and check to see if your modified adjusted gross income is near one of those thresholds. If you are, speak with your CPA about steps you can take to stay under those levels. There are a number of strategies that you could use. Now, in many of my videos, I talk about provisional income. Take a look at those videos to learn more about how to keep your provisional income lower in retirement. It takes planning today. Are you in your 40s, 50s, or early 60s? That window is right now. Take a look at the current tax brackets. They are some of the lowest on record. Maybe it makes sense to stop deferring taxes in the future, pay some now, and increase your tax-free investment accounts like Roth IRAs and Roth 401ks. Mandatory distributions from your IRA count as MAGI income, so working now to reduce those later can help. If you are under 62, you can do Roth conversions and not worry at all about your MAGI increasing into one of those thresholds. But once you hit 63, you want to be aware of the limits. Still, if you pay IRMAA for 1 year to maybe not pay at all in the future, the cost can be more than offset by the savings in the later years. Now, a higher end strategy to look at for those that are charitably inclined is to look into a qualified charitable distribution or a QCD. This lets IRA funds be transferred directly to a charity while satisfying the RMD requirements without increasing MAGI as a normal IRA distribution would. That can be a pretty powerful way to stay under those thresholds. Maybe stocking wealth into tax-sheltered vehicles like cash value life insurance can help. The tax advantages of permanent life insurance are well documented. Unfortunately, for many people, it's too late. They're having sticker shock over the Medicare premiums. But I bet if you are still watching this, you are one of the ones who could benefit from planning now. If you own a business and want to discuss how we can help with your financial planning, just head over to celestialwm.com, click on the Start Here link, and we can see if or how we can help you plan for a successful retirement. Are you interested in learning more planning strategies? Check out this video next, and be sure to watch the entire series on creating a 100% tax-free retirement income. Get clear, be clear.